Our final witness, Mr. Scott Stern, Chief Executive Officer, Lenders One, and Chairman, National Association of Independent Mortgage Bankers. And I'll just add, I didn't believe you're old enough to hold out role. It's been proven to me that you clearly are a Wharton man, and anybody that's a Wharton man certainly is qualified.
Thank you. Chairman Kanjorski, Representative Renzi, and members of the subcommittee, my name is Scott Stern, and I'm Chief Executive Officer of Lenders One of St. Louis, Missouri, and Chair of the National Alliance of Independent Mortgage Bankers. We appreciate the opportunity to present our views on the impact of proposed legislation on the GSEs. Since this is the first time our group has testified in front of this committee, let me say a quick word about Lenders One. We are the nation's largest mortgage cooperative. We play a unique role in the mortgage industry. Much like the agricultural co-ops that enable family farms to survive in an era of large-scale agribusiness, Lenders One permits locally owned mortgage bankers to compete in a rapidly changing marketplace. We are owned by 100 shareholder companies who collectively originate $40 billion annually in mortgages, including low-income and minority lending. We have originated almost 2 million home loans since 2000. The mission of Lenders One and NAIMB very much informs our analysis of GSE legislation. Like everyone at this table, we support a strong regulator with appropriate powers to regulate the safety and soundness and mission-related activities of the GSEs. Our written testimony outlines our more specific positions on issues such as portfolio, capital, loan limits, and program approval, so we will focus today on what we believe to be the most crucial aspect of the discussion. If anyone needed to be reminded why Congress created the GSEs, you need look no further than the front page of the Wall Street Journal on most any day of the past 4 weeks. Or look at CNBC, where it seems that every 20 minutes or so they run a segment called Mortgage Meltdown, a term for which you'll find over 41,000 hits on Google this afternoon. Or at this front page headline in yesterday's New York Times, Mortgage Crisis Looms. I don't personally believe we're approaching a broader mortgage crisis, but there's clearly a growing perception that we could be headed in that direction. But my confidence in the nation's housing finance system remains high. Tomorrow, I'll go back to St. Louis, and I and my member companies are going to keep making mortgage loans. Why am I so confident at this time of market uncertainty? Because even at this time of insecurity about the mortgage markets, I know with complete and utter certainty that if I make a good loan, I will have a buyer, Fannie Mae and Freddie Mac. I can't make a loan unless I can sell that loan. You see, that's the way the mortgage business works. And even though in some segments of the market, investors are disappearing faster than an ice cube on a hot summer day in D.C., I know Fannie Mae and Freddie Mac are going to be there to buy my loan. That's why they were created, and that's the brilliance of the system set up by your predecessors almost 80 years ago at the establishment of Fannie Mae and the concept of a government-sponsored secondary market. While other investors can and do walk away, Fannie Mae has to be there. Simply put, Fannie Mae and Freddie Mac are the firewall that safeguards the nation's housing finance system and its borrowers from market shocks and excessive volatility by providing confidence in mortgage capital markets. I will frankly tell you that the GSEs are not our biggest business partner for our companies, really not even close, but they're nonetheless crucial to me and my members and the housing finance system. Our confidence that the GSEs will be there at a size and strength that enables them to keep the market stable, even in volatile conditions, is what makes the system work. To us, keeping the GSEs at a vigorous scale and strength to safeguard that confidence is what the debate over a GSE bill is all about. We support the general approach of H.R. 1427 introduced last week by Chairman Frank. The bill would create the strong regulator we have all supported. However, we do believe the bill requires certain clarifications to ensure that the new regulator's power and authority is never used to diminish the one sector of the housing finance system best shielded from market uncertainty. You will find our detailed positions in our written testimony. Mr. Chairman, we appreciate your leadership on this matter, and we're grateful for the opportunity to share our views.
Thank you very much, Mr. Stern.